Let's go! Oh shit. Oh shit. New week, man. New week, fam. Hope you guys doing well. We have news in like 12 minutes. Tomorrow's the big day though. Alright, tomorrow we have the CPI. We're gonna prepare for the CPI today. Tomorrow's the big day. Tomorrow is the news trade. Tomorrow's the news trade. Hope you guys are ready for it. Alright? Alright. Welcome back, fam. Welcome back. As you can hear, my voice is a little bit gone. I got a black eye as well. Like I said before, I'm in fight camp right now. I have to fight in exactly 4 weeks from now. All right, so my fight is in roughly 30 days. So it's going to be a big month for us with LTA. It's going to be a big month for myself personally. And this weekend I had a fight gala as well. I was screaming for my friends. Absolutely crazy. Beautiful thing this week. It was absolutely insane. Couple of you guys saw me at the event. Hey Lorenzo, I saw your LTA concepts. Watch your YouTube channel. Kind of incredible to see this now in person, because I'm always locked up in my room or in the gym. Kind of cool. Let's get the party started, all right? Let's talk about gold here. Let's talk about the news. Most importantly, who do we have here in the building today? Let's set up a really nice and clean track. As always, let's chill. Let's do our analysis. Let's get back to work. All right, a big week ahead of us here. Nothing can stop us. LTA is going to take over. Okay, let me see who we have in the building with us today. As always, thank you for the love. Thank you for the support here. Let's smash up that like button. 500 likes. Couldn't be more crazy. The G's are back. The G's are back. I can see that already. All right. Beautiful. We got Steve. Scandal Slanger. Shorts King. All right. Igor. We got Rebook Designs. T-Boyski. Marco. What's up, Marco, my man? Snowfall. Yeah, man. Great to have you guys here. Okay. A couple updates. Super important updates for you in regards to everything that we're doing here right now. As promised, the printable ebook is finalized, is ready right now. All right. Extremely happy with that as well here. Just to clarify, a lot of guys are actually printing it out right now. It's much more effective, much more great when you have it in your hands, something tangible right here. That's exactly what you want to see, right? You want to see people printing it out, utilizing it, and actually turning it into a real book themselves. So that's why we created the printable version for you, so you can actually utilize this. Some people still print it out to the darker version. They have a lot more money, all right? A lot more ink necessary. However, that's absolutely so sick. All right, incredible job, guys. Keep it up and keep doing your thing here. And couldn't be more proud of you guys for perfection. Our goal this week is to continue our win streak. All right, to of course not lose a trade. However, it's gonna be a wild week. Do understand that this is all part of the game. The CPI, PPI, you name it. Tomorrow is gonna be probably one of the biggest days once again of this month, due to the fact that this is going to be extremely important for also the FOMC later on, and also most importantly for the dollar, because the dollar right now is on the verge of a massive breakout here. So yeah, let me know if you guys are ready for gold here. And let's talk about gold for a second, because obviously we have to sit this news out, man. Okay, you have to understand that this could be something that you do not or might not expect here. I'm not here to come with crazy predictions of a big price movement today. This could easily result in somewhat of a accumulation range or distribution range when we are actually building this out for tomorrow. So I would not be surprised if we see some volume now, and then after that the volume dies out. If that's the case, right, we can force whatever we want to force here, but it's gonna be a shorter stream. Okay, if there is volume and if there are nice breakout confirmations or whatever the case may be from any of our key levels in our entry models, obviously we're going to look for trade setups, like no doubt about that here. All right, so in this case, let's talk about what happened here, because yeah, what, 7 minutes left? All right, perfect. So opening was bearish. Okay, we opened up with a small top wick, we flipped the bearish weekly candle right here, we tapped into, let me know in the chat, guys, you know exactly what we're talking about right here. Okay, you know exactly what we're looking for. All right, we tapped into the 2338, the previous Sunday open. We said it's gonna be a very, very important level. We also have the previous weekly value area high. All right, it's what we call the magic tunnel. All right, the tunnel is where the magic happens, and you saw that we came into the tunnel, we broke out of it, and we came up. A couple of opportunities in the tunnel right here, tapping out of it, 100 pips, something like that. Is there a chance of coming back? Well, look at this hourly candle right now. All right, very weak, no bottom wick, whatever the case may be here. At the same time, the dollar shoot up to the Sunday open and got rejected from it. That's not a good sign for the dollar. Okay, so do that into consideration. So if price comes down back into the previous Sunday open here, and we push up, then we might see still a break above the 23.7047. All right, potentially the 2350. I think that's a potential scenario where you could look for continuations here. Matter of fact, we also have to look and understand what the weekly candle is doing. So look at the weekly candle right here. Okay, just to give you that perspective, you now have that indicator, right? The limitless LTA concepts, higher time frame candles, multi-overlay. What happened was we opened up, we flipped, we created a top wick, we came down. We of course tapped into that support that we saw right here from the previous weekly candles right there. And we're now pushing up a little bit, okay? I think that we're preparing for the CPI in order to make a big move here. That's my current status for now. If we start closing now, finally below the previous weekly value area high, short, continuation towards the previous weekly POC. I don't think there's much happening here in between. I think there is a big chance of a continuation down. Like I said before, the 2338 level is the most important level of the current week, okay? So if price breaks down, we break below the 2334, 2316 is next, all right? So yeah, pay very close attention around the tunnel. Let the news do its thing. Most importantly, what we have to worry about is the volume, because if there is not enough volume, you can all try to force trades around the gold levels of the 2338 or whatever, but the volume is going to die out quickly and it's just going to consolidate, same as what we've done yesterday. All right, we saw a little bit of a bigger move. After that, just basic consolidation in an internal range, something like that. All right, hope that makes sense. So 4 minutes for the news here. Let's first evaluate the news. We reflect on the outcome, and then we do another analysis to continue the process right here. Based upon that, we also keep a very, very close eye on the dollar. And of course, the last thing I wanted to share was look at what the youth is doing, because the youth right now is not playing around here, okay? The youth is potentially setting up for either somewhat of a move to the upside here. This would only bring gold down as well here. So the fact that we're still above it is fantastic, but any shorts happen below the 2234, which is the previous weekly value area high, okay? So that's what I would prefer to see, a break below a continuation, because this is by far the biggest range to look at, around 165 pips to the downside. If we can get the trade, we can get 100 pips done if there's enough volume and if there are enough continuation to the downside too, okay? If price shoots up and we miss out on our entry model, of course, the next level is the Sunday Open. The Sunday Open is the most important level here. Just to put it in perspective for you, what happened with another pair, all right? And I'm just gonna use it as a tool of reference. We're not gonna trade it, but I just wanted to show you, okay? We saw this move here, all right? GU came up, it came down, eventually broke below, it tapped into the Sunday Open, the opening price of the week, and it bounced right here. This looks very good, fam. This looks very strong. A V-shaped recovery from the Sunday Open is usually very good for GU here. But again, the news is going to determine if this is going to continue the process here, but our next key level is 2360. Preferably, I want to see price coming down one more time. That's what I would prefer. I think this would give us the most clear trade opportunities today here, if we're still looking to trade it, all right? Again, CPI tomorrow, they expect a better outcome in regards to the inflation data here. 3.4% instead of 3.5%. Last time we were higher than expected. So the fact that it's lower than expected right now could balance things out here and therefore could be good for gold one more time. But again, this is for tomorrow. We have to pay very, very close attention to the actual outcome of the dollar here, to the way the dollar is moving, the dollar is setting up here, because I think it's going to have a major impact on our trading this week in order to follow up here. Okay, 11 more trades, increasing our risk. That's our goal. That's what we're looking for at this particular moment. Let's sit it out. Let's wait for the news, fam. All right. Joker Joy says, yo, I know that I've unboxing. Yeah, it's nothing to worry about, fam. Nothing to worry about. It's part of the game. All right. This is nothing. I've seen worse in the gym. I've seen worse. Don't worry about it. Hey, can I check the Indian Bank Nifty for some minutes? We can check it out later. Okay. Yeah. Hey, listen, I'm telling you, constant competition, fam. You know, outside of the streams, you know, we're in competition. On the streams, we're in competition. We're always in competition. I get super annoyed in the weekend when I have to chill because I feel uncomfortable. We need to conquer something together, all right? That's why we have our trading warm app. You should have it too. Download it right now. This is your moment to shine. Get the printable version. Get the actual version. Links in the description. Get it sorted. 74 pages of entry models, setups, you name it. You're gonna need it for the streams. Perfect. What about the range from yesterday? Well, look at the news now, all right? Price down first, okay? Dollar back up. Oh, so choppy, so choppy. Well, good. Let's come down more. Let's come down more, all right? Let's do that. Give us then at least a follow through. 0.5%. Okay, that's nice. That's good. That's good. That's good. 2338 level does not want to give up though. We talked about this one before. I think we mentioned the 2338 already for the past 3 or 4 streams. And it's just the most important level. As you can see right now, we're still above the tunnel here. Are we going to break below the tunnel, or are we going to consolidate, like I said before, right here, right now? If that's the case, we have to look at the lower time frame. That's it. Lorenzo, can you tell me what I did wrong? I sold the Euro Japanese Yen yesterday when I had to enter Model 1 on the previous weekly POC on the 30 minute. Yes, what you did wrong was the following, okay? The moment the Euro Japanese Yen was there, the Yen basket, all right, the Japanese Yen basket was around there, okay? So it still had a massive gap to fill here, okay? I talked about this on our event yesterday. I said, be careful with the POC because the Yen is not there yet. The Yen is not in any of our key levels yet. And if that's the case, then you should ignore your current level. And that's why we utilize correlations, okay? It seems that the dollar is going to hold here. Sorry, that gold is going to hold here. Dollar, oh man, so choppy, fam. Oh my God. You can see it. You can see it. Yeah, 100%. Wow. Gold got rejected from the previous daily very low. Let's confirm that. Yeah, it did. Yeah, it did. Yeah, it indeed did that. Yeah. Okay, I'm gonna set, of course, the highs here as an important zone. I'll show you in a higher time for what I'm talking about. Let's remove this one for a second. Let's go to the 4 hour. Yeah, this was an initial move here. It's still that threshold, the 2349-ish. Still a very important level to look at. Most importantly right now, you know, pay just very close attention to that range here. And most importantly, again, the volume, okay? Yeah, news, especially the PPI here, like, don't worry about it, okay? Just don't worry about it. It's just not as important as the CPI. All right, the CPI is where the magic happens here. There is a big chance we're going to take a trade tomorrow during the CPI here. All right, you guys know I don't work with buy stops or sell stops. I work with limit orders. So that's going to be interesting. Yeah, man. Let price develop a little bit here. You guys know what's coming. What's coming in around 30 min. Let me know. Yeah, Uncle Jerome. Yeah, Uncle Jerome is coming along later as well. Funny enough, a day, or sorry, before the CPI as well this time. So it's all gonna be, it's gonna be interesting. Yeah. Did you have a boxing match recently? No. No, my sparring sessions are a little bit intense sometimes. Pretty good. How come everything moved but the gold? This is quite normal, all right? We see this many times before with the CPI, with the NFP, that you're gonna start consolidating. All right, so what happened was yesterday, yeah, we came down initially to our key zone, the 2338 and the 2334. You can see how beautifully it actually came back towards the previous weekly value high. In case you don't know how to use it yet, it's this key level right here. Let me show you. All right, you draw. Let me clean it up for you. Okay, utilize the fixed size volume profile from the left to the right. You set it up, boom. Previous weekly point of control, previous weekly value high. Previous weekly value high was the bounce. That was the exact bounce yesterday right here. From that, we managed to break and gain 140 pips to the upside here. Couldn't be more precise based upon that initial reaction. You know, but do take consideration that we also had what we call the previous Sunday open, which is the 2338, and it's such an important level. We cannot neglect it either. Okay, so yeah, all part of the game. Beautiful bounce though, beautiful reaction from it. Gavin, just an update. Everything is fine. Forgot that I made a whole new email. Okay, good. If you take the range of the last 2 days, you will see a value area high rejection. Okay. 4 hour closure is coming. All right. 4 hour closure is going to be key. The way we're going to close this is going to be important here. If we close somewhat neutral right here, guys, I'm going to tell you this already. It's going to be a short stream today. At least for gold. Unless we look at the Nasdaq, you know, the New York Stock Exchange open or something like that here, the US 30. But if gold is going to close this 4 hour candle in this range, it's going to be pretty relaxing until the CPI here. All right. It's going to happen then around there. When the CPI comes out, you're going to see something like that here. So 8:30. Yeah, something like that. Could be simple consolidation here. Okay. How come you're not using the previous daily key areas? Because we are now ranging. So we have been ranging practically. Okay, we're not really trending. All right, it's a different story if you're trending a little bit or if you're ranging a little bit. At least if we create lower lows, lower highs, it's fantastic. It's easy. You pull back, you look for continuation down. In this case, we went from coming down to consolidation. Yeah, I still see the trend line. I see what you mean here. We're still holding up. Yep. I agree with you. So let's wait for this 4-hour closure, and the next 4 hour might be interesting. Okay? For sure. Hey Louis, have you heard about what happened with Gamestop? I mean, of course. How can you not? It happened again, fam. It happened again. All right. Beautiful, beautiful accumulation here. Tapping into that range, coming down here, tapping into this initial zone. Super crazy how that move happened here in 2020 when we gained around 2,600%. We're doing it right now again. So yeah, we might pull back though, to be honest. I don't really believe in the follow through here. So I'm not really that like excited about it in that matter. But look at this. Look at that shit. Yeah, that's GameStop right there. Okay. Yeah, a lot of actual confluences around that exact level, which is the $10. All right, the $10 for GameStop right here, tapping into the POC and just shooting up aggressively. Yeah, volume does not lie, fam. Volume does not lie, even with GameStop right there. Crazy. Do we ever draw the volume profile on the current ongoing week or only on previous and early previous? Download the ebook, my friend. You can choose black or white, whatever you prefer. Yeah, so if you guys want to utilize the fixed range from yesterday, okay, it is looking very nice around this key level. I do like it a lot, and I do also really like the fact that we are now potentially closing that 4-hour candle above it. That's really, really nice actually, okay? So the fact that we're holding above it here might be very interesting. Just take that to the lower time frame and then see from there. This is what we call the tunnel, where two key levels met or meet each other right here. That's one. Very nice. This is the high that put in the low, so that's important as well, right here. Okay, we're building a lot of liquidity above it, by the way, at this particular moment. But don't forget, so do we on the downside as well here. So it is tricky. It is tricky, all right? Not gonna lie, it is a tricky day today. Makes sense when it comes down to the CPI here. Okay, so I mean, a 4-hour closure above the previous daily POC would be good. That would be nice. That would be a good start. Because what you then see, let me know if you guys can see it. Do you guys see a potential entry model here? On the 5-minute time frame, let me know. Yeah. Page number 53. Yeah. It's maybe not as clean as you might think it is, but I do like the fact that we're holding above the previous daily PoC. If you look on the 5-minute here, you have this consolidation here. You come up first, all right? You manipulate down. You tap into the previous Sunday open. You reverse. You still manage to close potentially above the previous daily PoC on the higher time frame, which is really good. And the 4-hour and 1-hour candle closure should be above the point of control. And then it's all about the lower time frame. And then the question is, okay, are we going to take, and this is important, are we going to take the breakout entry when the 4-hour has closed above? Or are we going to go for the retest entry? There are two different ways of entering entry model 3 here. Okay, the breakout or the retest. This is something that we can talk about. At this particular moment, we need to see a closure above here. PPI data is positive, but why is gold coming up? Because the dollar is massively reversing. All right, it's absolutely madness right now. Okay, we opened up, we created a top wick, we broke below the Sunday open and the previous weekly PoC. We held support in the previous weekly very low, right? Really clean, really nice. If you want to draw the fixes right above, you want to confirm this from the left to the right. Previous weekly very low, okay? Tapped into that zone. And held support there, came up, came down, swiped the highs super aggressively, a lot of manipulation here, and is now pushing down here, okay? Obviously, it's not looking strong. We need to wait for that closure though, okay? That closure is going to be super important. I am going to tell you this already. Stop loss tight, or stop loss or management of trade very tight. You can understand why. Something like that. Now the question is, entry model 3 retest entry or breakout entry, breakout closure, okay? That's going to be the question for today, based upon the 4-hour here. If that's the case, and we really start breaking the highs here, okay? Obviously, yes, there is definitely some liquidity built up above these highs here. Definitely something to take out. So that's definitely interesting to target, for sure. The Sunday open as well. But yeah, we're gonna find out in around 15 minutes. The 4-hour closure is the most important. So waiting for 4-hour closure. There we go. If you start falling back into the range, you're gonna see a lot of consolidation today. Or at least until J.Powell speaking, and so on here. Sorry, I missed entry model 3, sell or buy. Download the ebook. It's important that if you want to trade with us here, you download the ebook, okay? Links in the description, it's free. Get it. and watch it. Page 50, 51, 52, 53. I think that's the one. Yeah, your guys are incredible, man. Thank you for sharing and everything. It's really awesome to see that. With the song, with my favorite song. That's a, this is what we call an absolute G move. That's a G move right there. All right? That's a G move right there. Beautiful. So much news tomorrow. Which one is the most important? The CPI, my friend. The Consumer Price Index, all right? Look at gold, look at gold, look at the dollar. Interesting. Still interesting. Still interesting. Oh shit. 4-hour closure is 11 minutes. Where can I get this book? I really prayed for some real knowledge. Thank Lorenzo. It's in the chat, my friend. But we'll get it sorted for you. Let me write it down for you. Let me write it down for you. It should be good. Boom. Is it coming? There we go. Take it or leave it. People were like, oh, Lorenzo, your eye, ah. Let's put some makeup on it. Makeup? I'm not a noob. Come on now, fam. Cup of tea, you guys, charts, LTA concepts, CPI news. It's gonna be a big week. That's it. All right. Looks like it will be an entry model 3 retest. I believe so, because if we're starting to break out now before the 4-hour closure already, and we start moving up here, then yeah, for sure a retest potential trade setup here. But yeah, what I want to see is just us not coming back in that range here, because then it's going to be very boring today. So yeah, really want to make a nice big expansion out of that range. That will give me much more confidence for us to look for further continuation or a rejection or whatever the case may be, but at least there is some action right there, some serious price movements here, okay? Otherwise, they're just building liquidity on both sides, not forcing to take it out because of the fact that, you know, the CPI will do it for them. So far, I'm not impressed with the 5-minute too. Lorenzo, sorry, can you explain entry model 2 and entry model 3 a little bit? Just a bit confused. Entry model 1, I have understood very well. So in essence, entry model 1, or sorry, entry model 3, the retest is practically an entry model 2. However, an entry model 2 can also be used when you missed out on entry model 1, if that makes sense. It doesn't have to be that consolidation, manipulation, expansion always. It can be also an expansion, a retest, and a continuation without consolidation before. Entry model 3 is kind of like entry model 2. Same, where you break above. You manipulate, you tap into a key level holds, you come up, you shoot up, you break above, and you take the top as a confirmation, and you take this to the lower time frame, like the 5 minute. You don't enter right away. You wait for price to tap into that high that put in the low as our retest, and you let 2 candles develop first for the third one to take action on. Does that make sense? So it's the same thing. 2 candles, 2 bottom wicks into that top, third candle entry, stop loss below. If you want to play it safe, stop loss as usual on your entry model 3 initial stop loss. But that depends on each condition. Okay. Many cases you can look for a retest and then just look for a smaller, a higher risk reward setup. That's it. So 7 minutes for that closure on the 4 hour. It's gonna be good. It's gonna be important. And then we'll wait and see here, because not really impressed with this 5 minute candle for now. We could easily fall back in that range here. Yeah. Lorenzo, have you seen the new volume footprint candles on TradingView? No, I haven't. Show me. Let me know where I can find that. Sounds interesting. Sounds very interesting. Yeah, sounds very interesting, my friend. Yeah. Top left, where you change the candles from lines, bars, and Heikenashis. Oh, really? Okay, let me see. Oh, damn. Wow. Okay. Oh, I need to upgrade. I need to upgrade my account from Plus to Premium. Okay. Let me do that right now. Let me do that right now, because that's gonna be sick. We can use that for sure. Let me upgrade right now. Let's take the premium right away. You sold me. You sold me right away. All right. You want extra data. Well, let's take then the US stock market, just in case. Yeah, we have what, 4 minutes for that 4 hour closure, right? Okay. No. Nasdaq, yes. Do we have some commodity index here? Yeah. There we go. Okay. Yeah, we have to do that, fam. All right. We've done it. Wait, let me confirm it. There we go. Sign agreement. Okay. Accept. No. Do you use market data slowly for personal use? Okay. All right. Okay, fam. Let's check it out. Is this gonna help us? Because you guys know I love the footprint chart. All right, I like what gold is doing now. 2 more minutes for that 4-hour closure, by the way. Let's quickly check it. I need to go to the futures chart for sure. Holy moly! Yes! I was waiting for this. I was waiting for this shit, guys. This is, oh my god, this is gonna be a game change for us. Thank you, TradingView. What a G. Oh my god, what a G's. Yeah, you will understand why this is so powerful later on here, but this is massive, fam. You have no idea. All right, the volume profile is 1 layer. The footprint with the volume profile on TradingView using LTA is taking things to a whole other level here. So, anyways, let me do my thing real quick for a couple days, and then you know, I'll show you something awesome later on. For now, not necessary. LTA, why do you mainly draw your volume profile? Because I like to sometimes use fixed ranges. Sometimes I use swing ranges. Sometimes I use previous daily ranges. Sometimes I don't want to see the previous daily range of a Monday or a Friday, right? It all depends. It literally all depends. Okay. For now, 4-hour closure, impressive. Not bad. Not bad at all. Okay? I'm actually kind of impressed right now. Yeah, well, if it's too expensive for people here, no problem, because we use it on the we're going to use it on the live streams. And yeah, it's going to help still on the lives for sure. All right, so we did manage to close above here. The 4-hour has now been officially closed, so that's fantastic. So now we are looking at the lower time frame. We have seen now the manipulation here. We're now trying to hold above here. I'm actually quite impressed, to be really honest with you guys here. Of course, we have that resistance right now from that initial range. Let me quickly find out where the previous daily, okay, the value highs is way up there, so that's nothing really to worry about. I have to say, it's looking good, and the way the dollar is closing here is also looking fantastic. Okay, we might be pulling back to the previous weekly value area low one more time, and if that's the case, then I think gold is going to potentially give us a little bit of a driver here. Let me quickly go to the lower time frame one more time, and let's draw the fixed range from the low to the high. There we go. It gives us a level at 2345.451. Let's see how price responds at this level and how we react from it. Okay? That's what we're going to do. Lorenzo, how do you know? Sorry, Lorenzo, do you know why my volume profile does not work correctly? It doesn't give me the levels that you have. I use the Owanda chart, as you can see in the top left corner. Owanda works really good. FXCM works really good. There's one more that works really good. I forgot which one it was. Pepperstone? No. Pepperstone? Capital. Capital. Yeah. How much leverage should we use? Well, it depends. Like, you have to understand that leverage is just a bonus. It's just a tool to provide you with more money. So you can have the highest leverage and you have a 5 pip stop loss and you are stopped out. So you need to determine what your risk to reward is. And, you know, you need to base that on your balance here. So you need to kind of manage this way. I always say use as little as possible. But yeah, it's my personal opinion. All right. So to sum it up, the 4-hour closure closed above the previous daily PoC. Lower time frame, yes. Tapped in the previous Sunday open. In the tunnel, one more time. What did it do? It actually took out the lows here. That's a good sign. A V-shaped recovery is a good sign. Consolidation, then that manipulation to take out the lows, then a V-shaped recovery is a good sign. Okay? When the dollar breaks below the Sunday open, closes below the previous weekly PoC, that's a good sign for gold. All right? So for now, what I want to see is I want to look at these internal ranges. And I think for the first time on stream, we're going to look at a potential entry model 2 scenario. And that's going to be at page 51. Right here. All right? Page 51, read it. And look at page 51. Okay? And then you will get what I mean here. You tap into key level, you break structure, you go up, you retest, you come back down, you tap into the PoC. In this case, we managed to draw the PoC from swing low here on the lower time frame to swing high. What we want is we want to hold above here. Okay? We really want to hold above here. And if that's the case, and we get somewhat of a confirmation, I don't care really on what level it is, okay? Then I'm very, very happy to see us potentially tapping into the lower time frame swing PoC, looking for an entry model on the lower time frame, executing it, and then placing the stop loss below the low. Or an aggressive entry, stop loss below there. But if that's the case, I want to see at least one swipe of liquidity here, like a massive wick, something like that, filling up a small gap, you know, then putting the stop loss below it. I will be fine with that. If that does not happen, stop loss goes below around 23.41 here. Okay, so yeah, let's see how we tap into this this key level, fam. We will probably tap into it any moment. Have you ever switched to futures? So the reason why I was trading futures was because of data, right? The data in the United States, by the way, it's almost important right now to start trading futures regardless. But for now, based upon the data that I'm seeing from the blueprint, which seems to be accurate, the volume profile seems to be accurate, or for sure is accurate. Yeah, I'm fine with this, utilizing this information. So I'm cool with it for now, still. And it's cool that the one that allows this as well, because there are brokers that don't allow you to see this, particularly here. So yeah. Hey. Where can I get your indicator? We have two indicators right here, okay? We use the limitless LTA concept session breaks. Sometimes we use the multi-candle overlay. You can both get them in our Discord right here, okay? You go to the limitless section. You get into LTA indicator. And you put it in right there, right? Nice. By the way, thank you for the 74k subs, fam. Appreciate it, all right? You guys are killing it. Thank you very much, all right? Yeah, also, we just started our Instagram, all right? Instagram, boom. We're getting there, fam. We just started our new Instagram channel. All right, it took a while. We were actually doing nothing on it. We decided to start our Instagram right now to keep up with the big boys. So give your man a follow, man. Lorenzo Corrado of X for your daily refreshing updates, okay? Awesome. What's up, brother? Did you modify your LTA concept? It's still the same. It's still the same. We just actually, you know, released it a month ago. So it's pretty early still to adjust, to modify a lot of things. Why? What happens is that we want to work with a lot of guys, improve, get familiar with it. And once we know that we have like a really good foundation, we're going to step our game up. We're going to come into new discoveries and it's just going to be, you know, fine tuning from there. Constant development. Yes, sir. Lorenz, what about your private group? Yeah, still closed, friend. We're still closed. We might be opening up at the end of the month. Still closed for now. We did decide to stream 4 days a week now. So we went from 3 days a week to 4 days a week. It's nice. Feels better. Feels much better. Feels really good, actually. All right, okay, this is going to be so important. The very low here. I'm actually quite impressed, to be honest, with the movement. What I'm not that impressed with are these entry type of confirmations here. Something that fits my style. But I'm gonna set a key level here, 20 to 45-ish, something like that here. So let me set it up. Yeah, it's gonna be interesting, fam. All in preparation for the CPI, man. Tomorrow is our news trade day. Yeah. Yeah, look at it 5 minutes as well here. Be aware of that. $50-minute closure is about 2 minutes, okay. Otherwise, I really want to appreciate Mulla for the time he's taking to provide us with his opinion. Kindly pass on my feedback to him. Yeah, so Mulla is a guy right now in our group, in our private group. And he's by default just the perfect example. The perfect example of taking action, putting in the work, executing. He's a bit blurry for you guys.
Yeah, we're here, man. We're here, man. We're here.
He's a G, all right? Putting in the work for you guys here. Show me charts. They're beautiful. And that's what happens. That's what happens, you know. They will practice, they put in the work, they start helping other people out because they're very open-minded and other people learn from them. That's how you create a movement right there. Right? Prime example. Thank you, Mulla, my friend. Are we buying gold today? If price comes back to the 2245.451 and it shows us a sign that we're holding, I will execute along. Yeah. How do you draw the volume pump on the lower time frame? So you take the low here. You take the first initial expansion until the break, the top, and you draw to the top of that range until the retracement. We missed entry model 1 on the 50-minute. It's actually the entry model 3. But what we're doing now is we decide to either go for the retest. And it mainly has to do with the current market conditions here. Okay. So I potentially retest entry, which results you into entry model 2. That's a lower time frame entry model. By the way, the reason why I'm doing this here also in this case is because you have to understand that if we would enter on a entry model 3 here, okay, then our stop loss is forced to go around 74 pips below it. Okay, so the only way to get that to fix that is to get into our lower levels to find an entry model 1 on the lower time frame, and to then increase our risk to reward by putting our stop loss slightly tighter. Okay, so somewhat around there or here. It's not going to be a big difference, but it still will have a massive impact on your risk to reward right there as well. So, and you wait, you are patient, and there is a chance you can increase your overall risk to reward here. Yeah, double confirmation there. Whoop issue works at someone on your left eye. Yeah, so for everyone who don't know me, I'm not saying I'm a boxer, but I do boxing, okay? And I'm preparing for my fight next month, so this is all in preparation for my fight. It's pretty normal. So tomorrow you will probably hear it one more time. I'll tell you one more time. Okay. Yeah, let's see if Paz can get there. Bum, bum. Facing love resistance, huh? Gold. .30-minute closure, right? So if you have the 30-minute closure above there, stop loss below the previous wick could still be an option. 30-minute closure above, next candle could lead into continuation as well here. The New York Stock Exchange open. Yeah, we still have a fixed range which we can work with as well in case. I saw in your background monitor something like Market Cipher. No, this is just for the show. This is just for the aesthetics. Yeah, that was actually quite crazy with Gamestop right now. I don't know what happened here. How much? 300% on the stock. That's nothing. GameStop, man. Oh, man. What a statement right there. Again. What a statement. Oh, it's at 68? Ah, the pre-market. Yeah. Oh, man. Oh, my God, man. Yeah, again. Factual. Sorry. My bad. Totally. Yeah, this is like 600. 600%. Yeah. Yeah. Okay, we're pushing down a little bit. Yeah, we're chilling on the lower time frames today a little bit. Now we have to pay attention to the lower time frame for now, because that is usually what happens when you are in a bigger consolidation range. You wanna start looking at the lowers instead of trying to come up with the right structures here, because everything is so well done together here. Yeah, major flip there, major break. Yeah, a lot of volatility in preparation for tomorrow. How many trades do you aim to take per day? I don't aim for taking trades at all. That's the wrong mindset from my standpoint. I've done that before, where I said, you know what, I need 10 trades a day. Because 10 trades a day are gonna keep the doctor away. It's gonna keep the financial doctor away. Sorry, need to say it right. I realized quickly that it was a mistake. So it depends. Sometimes, you know, I have a couple trades. I have 2 trades in London. Sometimes I have 1 in London, 2 in New York. Sometimes I have 3 in London and 2 in New York. Like, it really depends. It really, really depends. But it have to align here. Sometimes I have no trades. This is completely fine as well. Why not entry model 1 to sell? Well, the dollar is weak. We kind of swiped the lows here already. Okay. So there are a lot of reasons showing us right now that we're looking strong, looking actually quite decent here. And just the only thing I'm looking for is just the right entry model for our momentum here. Okay. Everyone who's new, it's very important for you to download the ebook. It's free ebook. It's 74 pages right here. Okay. It's no joke at all. And I always say to guys here, don't trade with me if you don't get this, or if you don't at least have downloaded it and checked that out here. Because, you know, we have created this for a reason. We have created this for the people on the live streams and the people in our community to make sure that they understand what we're doing when we're trading live. Why would I trade live? I realized this later on. I was trading live for a year, doing whatever I wanted to do, random, based upon my personal strategy, right? Without explaining you what my strategy was. And I get it, it's fun. You come here, you take my trades, that's it, done. But I was like, we're wasting so much fucking time right now. So much time. And we're not learning while we're earning. So I was like, you know what? Let's fix this. We need to fix this. And that's what we did. We fixed it. So what I want to see is this. I want to see price pushing at this level. I want to hold here. Give us somewhat of a confirmation. And continue the process. Somewhat like that, something like that. Let's see how we evolve here. So every time I try to open the ebook, it shuts off automatically after page 10 or 11. That's not on us. That's not on us, my friend. That's definitely not on us right there. On your levels, how do you confirm entries? Volume. We use volume analysis on the stream. And with volume analysis, I mean volume and price. I have never seen somebody utilizing this on stream, live. It's for me the most chill way to trade. The most effective way to trade for me as well. we utilize volume on price, and we then combine this with the understanding of candle formations, candle closures, volume, session volume, which is different. Right, in this case, the New York Stock Exchange is opening up, so we might see the volume that we need for that to happen. And based upon that, we move forward here. What's the full form of LTA? This with level 2 data. That's the full form LTA. So right now you haven't seen full form yet. A lot more things coming here. We were explaining things step by step right now. And the best way to do it is by leading by example, executing trades with that exact strategy. 4 days a week. And level 2 data is what comes next. So that's the full print. That's the heat map. That's like, the depth of market, a couple other tools that we utilize around price levels that we use with the volume profile. So the volume profile comes first. Price steps into our key level. Once we're at our key level, we have our entry models, right? Our confirmation entries work very well. They work pretty solid overall. Especially the entry models 1 lately have been absolutely killing it, right? 1, 2, 3, 4, 5, 6, 7, 8. But imagine if you can get to a level, you have your entry model 1 confirmation, you have your candle confirmation, and then you utilize level 2 data. Yeah, that's just the cherry on top. But I don't think it should be something to worry about for you right now. I really believe that the foundation is just already like you want to go from like an 90% or an 85% to 100%. Right? The goal now is to get from 20% to 85%. That's the goal right now. We're gonna go to a different chart for a second. Just quickly look at it. Let's load to gold on FXCM as well. By the way, this is looking good. All right, the weekly tapping into the zone. That's good. That's really nice. All right, that's why we talked about the 2238 level. It's that weekly candle, that retest of that weekly candle, and then a nice confirmation here. The flip will happen at, actually that real break will happen around Sunday open at 2360. So pay very close attention to that zone as well. What we want to do is we want to drive to that level and see from there. What is most important now is that because the New York Stock Exchange has opened up, we want to see some volume. And let me utilize the lower time frame now because we have created multiple new highs. Initial break, low, high. Same level, 2346. The dollar is looking very weak, fam. Dollar is looking very weak. Uh, 2346, 47 is also a level to maybe look at as well. We're keeping a close eye on it. Any one of these levels here. I want to put them both on it, and then we have what we want here. All right, this is the moment of truth. If we manage to get an entry model 1 here, which is then called the entry model 2, right? The same thing on the lower time frame. We take it. I'm still looking at this level here. Initial level we talked about. Hopefully it happens soon. Because if Powell comes along indeed, then the last thing you want to be is in position. Unless you can secure yourself. Yeah, that's it. Strong level, strong level, strong level. Dollar reversing, well, yeah, well, the dollar right now is maybe pushing up a little bit, but it's still below the previous weekly value, very low. We have closed below it, we tapped into it, and we get rejected from it. So, for now, at least, it's nothing really to, to really worry about, to be honest. If it's in 10 minutes and we still don't have an entry, then Uncle Jerome, all right? Good, we have our initial level right now. This is what I wanted to see. This is what I wanted to see. Nice. I want to see a closure above. You guys know it. You get what we're looking for here? You know what we're working towards too? Let me know if you get it. If you get it, type in a yes. All right? Because I think we're looking at the same thing here. Nice. Yeah, exactly. So candle 1, 2, 3, and 3. Right? 5 minutes. That's the lower time frame swing PoC for you, right there. That's no surprise. That is no surprise. We just had to wait for price to pull back here. Now the next 5-minute candle could be the entry candle. So yeah, let's see. I hope we don't come up too high. It would ruin a kind of our risk to reward here a bit. But regardless, the target is the 2354.5. That's a nice target to look at. And the reason why is because that's the basically very high, I believe. No, sorry. That's the early basically very high. Or previous daily very high. My bad. Previous daily very high. Majid says, can you correct me? We have touched the we have touched the POC, and now we've entered model 1 for sell. Why you say it's wrong? So I don't know what you mean. Yeah, that's a serious break. After the tap. I don't hope we break out too fast, too quickly here. Because I would love to see price, coming down a little bit, because you have to take the next, potential trade at the break of that wick. Okay, let's see here. So obviously it's news. We have Uncle Jerome as well. I have to reduce my risk. I cannot risk 2% here. Stop loss though. Wait, let me see. $23.60 comes first. Yeah, 26 is the opening price of the week, and we have 22.54 as well. So that these are two key levels that we have to talk about. Yeah, it's looking pretty decent, fam. It's looking pretty decent. Um, 1,500. No, 1% this time. So it's something like this. Stop can go below the previous wick though. The bigger the wick, the better it's gonna be. And it's a massive TP at 23.54, breakout and entry. So you want to enter on a break. Stop loss can be a little bit wider, not too crazy. Dollar is rejecting. It's rejecting from this zone here. We came from the previous wick very low. And it's all looking solid, fam. So my entry is gonna be there. I'm gonna risk much less than I'd usually risk because there are many factors. We have the CPI. This is purely risk management, trade management right there. Okay. The setup itself is a lower time frame retest of the LTF Swing PoC. It's that 2-wick trade with the third potential break of the wick leading into continuation, which hopefully can bring us to the 23.54 first. Right there. And then stop below there. And then entry there. All right, done. Manage your risk, don't over risk. It's news. A lot of things are coming here, so be aware. You want to see immediately follow through here. My entry price at 23.50. We did see the following, right? Consolidation, manipulation, expansion to previous Sunday open. We expanded, we retraced into the lower time frame swing PoC. We were waiting for that retracement, right? We saw a beautiful reaction from it. Now you want to see that this third candle breaks that exact level the wick of the previous candle. And then what we're looking for is that continuation trade towards the 23, 40, 55. And then from there on, it's taking profits. It's managing our trades, securing ourselves, whatever the case may be here. Okay. Good luck, man. First lower time frame setup on the 5-minute here. Let's hope this will turn out to be fine. Let's keep our winning streak alive. We're gonna find out soon. You got yourself in a bar fight? I'm the friendliest guy you will ever meet in real life, in person. Oh no. No. I don't fight on the street. Unless I have to, of course. Yeah. What got you into fighting sports? I'll tell you what got me into fighting. I was always working like in the gym, right? Working out, trying to become big, blah, 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 blah. And then at some point I realized, oh man, I'm looking good. You know? I'm looking good. But I can't fucking fight as good as I want to. That's a little bit stupid. That's a little bit delusional, you know? It's practically trading on a demo account and selling your course. It's actually that. That's how I felt, all right? So I decided one day I'm gonna fight. I'm gonna go in a boxing gym. I'm actually gonna take it serious and take things to the next level. And yeah, competition, fam. It's all about competition, right? Trading on stream, competition. Fighting off stream, competition. Okay, we're gonna quickly cancel the trade. Not joking. The next 5-minute candle, no bottom wick here. There's no way I'm gonna trigger myself in a buy stop when this wick has no bottom, or this candle has no bottom wick. I'm ready to re-enter at any moment and set my trade right here. But you get it. You get what I mean. So trade is cancelled. On the lower time frame, you have to be very precise here. You want to enter with a bottom wick. Why don't you upload your boxing videos? Well, at some point we're gonna come here. A lot of things you guys don't know. We're focusing on trading for now. You see, this 5-minute has no bottom wick here. We opened it. We wanted to see this third candle giving us that breakthrough, that follow through. Okay? We didn't see that follow through. So just be aware of the fact that the next candle can still, the 5-minute can still do it, but you want to see a bottom wick here. You want to see something like this driving price up and breaking the highs. That's the only reason for a follow through for me personally. On the 30-minute, same story, right? We have seen this before as well. So I hope we come down one more time and we flip bullish for our entry. That's just the plan. Imagine this, right? Imagine we come up now, we're getting triggered, and the candle flips bearish. You set in a bottom wick. Taking out the liquidity and then driving price, you know, or reversing, setting up a major top wick. Imagine if this flips bearish, then you have now a massive wick, and you flip here immediately to the stop loss, right? We don't want that. So this is just purely, you know, prevention in case that happens. And we're coming closer and closer to power here. So I give it 5 minutes. Too bad, because that would have been a nice break. It would have been a nice potential entry. So currently we have nothing. We have no limit order set, unless we drive down and we flip again. That's what happens on the lower time frame, fam. Our entries on the, you know, 30 minutes are by far our biggest winners. The 5 minutes are also fine. You just have to understand that there are kind of a couple different rules involved here. What about the risk management tool you use? Yeah, this is called Trade Manager, created by InvestSoft. Okay. It's actually very nice. I don't even know all the tricks and you know, tools it has. It has so much more. So I'm gonna hop on a call with these guys and I'm gonna ask them about it, because I want to know how it actually works. Because I think I'm using it wrong. I'm not using it correctly. That's what I think. It's definitely better than Magic Keys, that's for sure. At least the virtual, you know. It just definitely have more functions. Yeah, so unfortunately, no entry for now. We're heading 10 minutes into the J.Powell as well. And yeah, this candle ruined it kind of for us right now on the lower time frame. Or it saved us, who knows. But, you know, if we saw something like this, much cleaner, okay? Much cleaner. Yeah, and if it goes, yeah, whatever, it is what it is. Why the need for a bottom wick? Well, you want to make sure that there is no reason for them to come down, or as less reason as possible. And especially on a 5 minute, when you see, you know, price coming and creating these bottom wicks here, you just also should think about the development of a candle, right? So let's imagine that price now is there. Like our entry, our buy stop is right here. Okay? So let's imagine we get triggered into our position here. Price flips, right? Our stop loss is there. Okay? This candle flips and it flips bearish. How does the candle then look like? Well, the candle then looks like this. Suddenly, you have a massive bearish wick, okay? With something like this. All right? That's the worst way you want to be in position. Because if your stop loss is then there, and price comes down, it's so easy to just come and tag you out of your position here. So the only way to kind of secure yourself from that is by making sure there is somewhat of a bottom wick, and if price flips, you're not directly looking at a inverted, you know, structure. You're more looking into a indecisive candle, which is much better. So That's just prevention measurements around the news especially. So yeah. Oh, that makes sense. Okay, that's the main reason why we avoid trading wicks. And when it plays out, you think, oh shit, but when it doesn't play out, you're extremely happy that you got out. So yeah, don't be worried about that. How many minutes left? 7 minutes left, yeah? 6 minutes left, okay. Yeah, let's see if it's on YouTube as well. We can cover maybe quickly. It's always nice to listen to his beautiful introduction about the 2% rule, the 2% inflation, and the strong labor market. We're gonna see. So that's the main reason. So if your stop loss is there, and you then flip, you're now looking at a very nasty candle. And there's a big chance that you see that follow through. And then the question is, where do they want to go? They want to go for this liquidity. They want to take out this liquidity. Well, this is where your stop loss is at. So that's why we utilize, yeah, of course, candle wicks especially. Not just on the 5 minute, also on the 30 minute, also on the 4 hour. It's a universal thing. Dilbert says no news trade. So the thing with this is, bro, my man, is that when J.Powell speaks, at any given moment, price can do something Fugazi-wise, all right? Price can just flip at any given moment. He says something wrong, boom, done. This is not like the CPI or the FOMC initial outcome or the NFP news, right? Where it's pretty straightforward. Numbers come out, that's the information. Now this is him speaking, script, and then at every moment, like midway through, he can say something. People pick it up and are like, oh, that's not good for gold. Boom. So it's really hard to trade that specifically, unless you're, kind of at the end of it and the structure, shows itself and you have entries right there. Okay. Do you meet others in person? No, I have. But like I said, I went to this boxing gala and I had 2 people coming up. It was really nice to see. So I've never actually met a person in real life, like somebody that watched the stream. So it was really, really good experience. It shows that we're doing something. We're coming up. We're really upcoming guys in the game. Let me know if you guys know where Jerome is speaking, if it's on YouTube or not. Just want to confirm this. J.Powell. Man, he looks like my old uncle. Anyways. What's wrong with your eye? That's makeup, my friend. What are you talking about? You don't like my new style? He's live on the CNBC. Okay, let's check it out. German Pass, CNBC. Okay. Is it going to be an interview? It's most likely going to be an interview. We have seen that before. Okay. Yeah, okay. He has more influence on the dollar's value than another person. Traders closely watch his speeches, as they often used to drop hints regarding future monetary policy. So yeah, that could have an impact. Yeah, for sure. If anyone can drop the link, yeah, let me know. That was a clear win. Well, good luck. I'm telling you, do this 30 times and let's see how much you have won and how much you would have lost. Do it 30 times. Okay? Because I know it was a good setup. I know it. That's why I was looking into it. Otherwise, I would not even be interested in trading it. But we have some rules that we have to follow. Okay. Otherwise, we cannot stay on our 80% win rate, which is actually higher than the initial test. We came up around 76%. We stayed around the 76% a very long time. Now we're over 80%. Yeah, that's the same process. So yeah, great that it went in that direction here. But again, you also have to take consideration that it's always easy to say afterwards, oh, you see, you should have. It's better to say no. The reason why I didn't was because of this. And I know based upon the data that it would screw me more than it would give me that win. But again, the 2346, right? The lower time frame swing PoC. Do you guys get this part? Let me know in the building. If you say, I get it, tell you yes, I get it. Because this is an entry model 2 example, okay? I don't know why I said 1. It's an entry model 2 example. So let's put it for education here. Okay, find it on page number 50, what, 52? '53, 51, sorry, 51. Okay. AD says more often than not, it comes back to create a bottom wick. I agree. Yeah. Yeah. W for education here. Nice experience though. It's a risk next time if you want to take it. Yeah, it's for sure. Everyone can do whatever they want to do here and they can conclude for themselves if this is going to work in the long term or not. You know. Then just literally take any trade here based upon what we're saying. But you will find out yourself eventually. How is your win rate calculated? Break even excluded? Yeah, break even excluded because yeah, it's yeah, for sure, of course. Because it's not a loss, it's not a win, so we cannot count break even as a loss. If price shoots up though to the 2360 and Uncle Jerome is really nice with us, he's really friendly. Sorry, he's actually not nice. He's not friendly. He's very strict. Then we're gonna see rejection from the Sunday Open. That's for sure. Colby says I lost only 7. I had a sell bias. That's a G move. That's a G move. Because when we were looking for buys here, you should look into the chat and look at the people that are saying, no, it's a sell, it's a sell, it's a sell. Then there are only a couple guys that say, you know what? It was a buy. You were right at this particular moment. Because they entered sells here, stop loss somewhat there, I guess, or there. So it's good. I will acknowledge as well. If I lose, I will acknowledge that the price flipped here. Okay. Powell is live. Is he watching? Yeah, I found him. I always forget how to do it. I always forget how to do it. Where is that picture in picture? Oh, 2 times. Ah, thank you. Thank you. Incredible. Okay, let's listen to it real quick. Let's see what he has to say here.
My name's Claire Jones. I'm the acting US economics editor of the Financial Times.
All right.
I'd be delighted to. Let me say it's great to be here. Thank you for being here. And Klaas, thank you for this great visit I've had here to Amsterdam.
Amsterdam, okay.
It's an honor to be here. So the U.S. economy has been performing very well lately.
2%. Strong labor market.
Growth last year of just over 3%, quite a strong year. And it's driven by a number of things. I would point to a very strong labor market where you've got rising employment, you've got rising wages, so disposable income, consumers are spending. Generally, households are in good shape financially; they're not over-levered, and so we see a good picture. Consumer spending has held up very well, as well. Business investment has been strong. Businesses are seeing opportunities to invest, and that has helped. I would also point to a fairly large influx of immigration into the country over the past couple of years, and those people are joining the labor force. We're not going to watch this whole thing shortage here. In many industries, and so there are jobs, and they're going to work and they're consuming. So that's also boosting growth. So overall, a good picture looking at the data so far. The labor market is very, very strong. It was, I think, overheated a couple of years back, and what we've seen is it coming back in gradually into a better balance over the last couple of years. And now I think if you look at a broad range of data, you would say, you could say that the labor market is about as tight as it was before the pandemic in 2019, and that's good. Wages real wages are now positive, and unemployment has been below 4% for 27 consecutive months, something that hasn't happened in a half century. So labor market very strong, and again, signs of gradual cooling and rebalancing, so that supply and demand of workers is coming back into balance. Just as
previous data very high.
Inflation, it's worth starting with the fact that on a 12-month basis, headline inflation got as high as 7.1%, is now down to 2.7%. Core inflation got as high as 5.6% and is now at 2.8%. So it's down by half.
Previous data very high rejection.
So really happened over the course of last year, particularly the second half of last year.
Just to clarify real quick, we had that initial reaction, right? So 20 to 45, lower time frame entry model. By the way, also on the 15-minute, no bottom wick as well. So very tricky overall here, but we sat at 54, sorry, 2054. We were supposed to take out the majority of our profits already due to the fact that this is what we call the previous daily value area high, right? This is now where you're tapping into, and this is now where you get rejected from. That's no surprise. That's what we said, 2054 and 2060. This is where you're reacting from right now. So utilize these volume profile levels, and you have incredible targets for yourself to look at further continuations as well. It's just another prime example of how it should be.
And I'll stop there with the economy. Thanks.
Thanks very much. We'll be digging into some of that later in the discussion, but now I'd like to turn to President Knot. Could you maybe give us a little bit of a sense of how you judge the state of play in the Eurozone and here in the Netherlands?
Yeah, I think the state of play in the Eurozone is not entirely comparable to that of the US. We just came out of more than a full year of economic stagnation. Now, luckily, the signs of recovery are clearly there. We started off the new year much stronger than we had expected. And if you look at the soft indicators, that recovery is expected to continue into the second quarter. And see.
Do I sound like this Dutch guy, guys? Do I sound like that?
Even expected to accelerate in the second half of the year. And this is mainly on the back of ongoing recovery in real wages, ongoing recovery in purchasing power, and strong consumer demand. Now, there are two ways in which you can look at this recovery. Of course, you can say, on the one hand, the economy has proven to be resilient. We've went through quite a number of shocks, monetary tightening, unprecedented, and yet we did not really go into a recession. The sacrifice ratio of the disinflation process that we had to go through was virtually zero. Unemployment did not budge. So resilience was there. But on the other hand, the growth was clearly not as abundant as it was in the US. And that is clearly remarkable. Now, I think there is a multiplicity of factors behind this growth differential. But if you allow me to single out the two most important factors in my view. First of all, fiscal policy. And this was not only about...
No, it is not my father. No, this is not my father.
About the size of the fiscal stimulus. It was also about the design of the fiscal stimulus during the pandemic. In the US, there was a choice for temporary layoffs, income support, and then rehiring when the economy reopened again. Well, that means that a lot of labor reallocation took place, and we know that such reallocation is very productivity enhancing. But in Europe, we chose a different approach. We chose an approach that was focused on job security. The governments essentially took over the wage bills of the firms. And as a consequence, we froze the supply side of our economy for a couple of years. Then during this period of stagnation, there was a lot of labor hoarding, which means that we have gone through a number of years where there has been hardly any labor or, for that matter, capital reallocation. So we have not enjoyed these efficiency benefits of reallocation as much.
I'll keep it open for like maybe a couple minutes until the 50-minute closure. Listen to it, see if there is any particular price movement, or if you're just going to be hovering around here. All right? You don't want to stick too long if it doesn't make sense. So let's keep it open until the 50-minute closure.
Much as the US. And secondly, the economic impact, the negative economic impact of Russia's unjustifiable invasion into Ukraine were, of course, also much stronger on this side of the Atlantic than in the US. We are a fossil fuel importing area, so it meant that this was a very strong negative terms of trade shock, and this terms of trade shock of which we are recovering still also today. Now, on inflation, I think the picture is that I'm increasingly confident that inflation will decline towards our 2% target during the remainder of the year. This is mainly on the back of goods and food price inflation that is coming down. Services inflation has been resilient for a while, but we're now also seeing the first signs of improvement there. And that has everything to do with a slow but gradual moderation of wage growth, which is quite essential, I think, also going forward in making an assessment of inflation risks. But all these developments clearly point toward further disinflation. Also here, an intriguing question is, of course, is there more similarity or are there more dissimilarities with the development in the US? From the onset of the inflation shock, it was clear that the balance of root causes between, let's say, positive demand shocks and negative supply shocks was different in Europe from the US. The US had a much stronger demand component. I think we had a much stronger supply component. Yet at the same time, there was a remarkable synchronicity if you look at the development of actual inflation. So the bump that you've been seeing in the US, the question for us now is, are we going to see such a bumpy development as well? So far, we've not seen any evidence of it, but that's clearly a warning signal.
So far, nothing spectacular here, based upon gold. No volatility whatsoever.
For us, also not to come with any sort of premature declarations of victory. All in all, I do believe that inflation is probably less persistent in the euro area than in the US. And that leads me then to conclude that if we manage to continue on this track, if the incoming data continues to validate this development, that it will be appropriate for us to gradually take our foot off the brake, to remove some of the restriction, the monetary policy restriction that we're currently imposing on the economy. The data that needs to confirm this, a lot of that will be available at our June meeting. We will have an additional data point on the labor market coming out next week, the triangulation between wage growth, productivity growth, and profit margins, which is important. Then we will have new projections, and I'm confident, again, that if they confirm the picture, as I just sketched it, that June will be a good opportunity to make a first move in removing restriction.
Okay, very clear hint at June.
These lower time frame swing PoCs do not lie, friends. They do not lie here. All right, swing low here, swing high here, internal range on the lower time frame. Same thing here. You can see how much demand there is from these specific key levels right there here. Yeah, we have to sit this one out still a little bit.
There, we'll come back to whether we could see further moves in July too. But just to draw on some of your comments there, you seem broadly confident that inflation is going to prove less of a problem in the Eurozone than it seems to be at the US at present. We've seen quite a reasonably high PPI reading today from the US, J.Powell. Some people have said that looks hot. What do you think of today's reading? And more broadly, is there a risk that inflation becomes a lot more of a problem in the US than it is elsewhere?
So we had a producer price index reading just a couple of hours ago, and I would say it's actually quite mixed. The headline numbers were higher, but they were backward revisions, and we're of course disassembling it, taking it apart, and looking at it. And I think markets and analysts are looking at it as I wouldn't call it hot. I would call it sort of mixed. But in terms of the overall picture for inflation, I think you have to go back to last year, where we had historically fast disinflation. Inflation came down by two full percentage points last year. Why did that happen? It's really two forces working together. One of them is just the reversal, the unwinding of the pandemic-related supply and demand shocks. So that we thought we would always get that. We thought we'd get it in 2022, and we didn't, and then it really arrived in 2021. So that was a big part of it.
All right, I see something. All right, so there we go. Okay, so there is one more chance that I might be interested in, and that's actually the last chance here. And that is if we take out the lows here, we manipulate that wick, like we talked about, that had no bottom wick. We take that out, so we actually manipulate the 15-minute here, okay? But we're still managing to close above it. if we do that and we take out the lows here, so we have to then take out the 2247.75. The lower time frame swing PoC again, you know, you see the reaction from it. You want to see a steep wick into that low. You manipulate the low, and you still manage to close above it. You then have a double wick confirmation. If you then break the high, it's a one-to-one setup. It's a potential one-to-one trade here. Nothing particularly crazy, all right? A quick scalp right into that gap that we have still above as well here, right? Something like that, right there. Based upon volume, that swing point, that's showing us that the lower time frame swing PoC is holding. We have manipulated the lows, and we then break with the next candle, potentially then the highs here, giving us on the 5-minute or 10-minute, we need to see which one it's going to be, or 50-minute potentially even, an entry model. That's the last chance. So that means that I want to see a manipulation. A closure above the swing PoC. And a flip, a break of the previous candle. To look for current continuation to the upside. Alright, it's something like that. And our stop will be, you know, of course below the manipulation wick. Targeting the previous daily value high. If you shoot up one more time here, there might be a reason for them to also take out this wick right here and target that wick to tap into that range, something like that. Okay, so it's still a possibility. What you don't want is close below it. So yeah, initial entry, you saw it, okay. We get a second chance. This is typical CPI behavior. You can see it for tomorrow. All right, we closed above it. we did close above it. Let's at least manipulate the lows then. That's the next step. Manipulate this level, fall down and flip and still close above or flip bullish. Okay, please give us the link to your trade manager on MT5. I do not have it. I need to, I'm not partnered or whatever. So it's just, you know, somebody gave it to me. It is called Trade Manager by Gamestop. If you type this in on Google or go to investsoft.eu. It costs money though. Yeah, so give me the lows, take out the lows, and flip bullish, break the highs. Scalping 101 with the point of control. Are you still testing limit orders with the point of control? Yeah. Absolutely, my friend. I got some good news, but it will come later. Let's give us that swipe then. Let's give us that lower low. Take out this wick. Take this out. Still come up and break the highs. That's the only shot for today. Are you going to trade CPI tomorrow? Yeah. Most likely place a limit trade before the news. It's one of these days, okay? We have a strategy for news, particularly. All right, let's calm down. Let's do it. What do you need volume for? Great question. Volume to me equals proof of interest. Proof of interest creates more interest. So volume at specific price levels, exactly. I'm not talking about volume when you see, volume, right? Session volume. I'm talking about executed orders on a certain level, executed on a certain moment in time. So for example, from 9:35 till 10 a.m. EST, right? 9:35 to 10 a.m. The most volume was traded at 2349.113. That's why we're bouncing here. That's why we're reacting from it here. From 8:30 till, need to confirm this, 9:10, right? Sorry, no. From 8:30 till 8:50, the most volume was traded at 2345.48. What happened? We pulled back into the 2345.48 and we shoot up from there. All right. So that's how we utilize volume on the lower time frame. It's really nice for scalping as well. I have not integrated a scalping strategy yet with LTA concepts, but it is gonna come. Right? But in order to get that, we want to understand the full spectrum first before we can move to the lower time frame. But it is very nice. It is very nice. It has potential. Last chance for us to come down and break above. That's it. By the way, guys, if somebody asks me about my eye, please help me out, okay? In the chat. Please help me out. Okay. Yeah, so as you can see here, Uncle Jerome here is not that impressed.
Central.
For now. at least. All right, dollar is indeed moving a little bit up, but again, where are we getting it, or sorry, where are we rejected from at this particular moment? Let me know. What is this level called? Why is it so hard to break above it? Previous week very low. Exactly. So we broke below the previous week very low. We couldn't break. We're very hard time breaking above here. Another rejection is going to drive gold up here, but our entry would have been again below that wick. Our stop loss would have been below that wick. We need to swipe the lows here. If we don't swipe the lows, then I'm forced to put my stop loss where all that liquidity is built up here, you know, potentially. I don't want that. For the rest, looks pretty decent, but that's what I just want to see here. Overall, these initial levels are holding up very nicely here. Hi Lorenzo, ever since I started using LTA while trading, I'm making so much progress. Nice, bro. Yeah, beautiful. Beautiful. My English is not good as others, so I suggest you more pictures, notes, symbols than you talk. You talk too much, I don't really understand. Maybe this is not the right stream, my friend. I wish we had subtitles, but you cannot do this on live streams. I tried to figure it out, but it's not possible. Coming down. So for now, buyers are still in control, right? There's nothing really to think about selling here, okay? Like I really don't get where that selling is coming from for now, at least, okay? I personally, I really don't get it because, you know, we swiped the lows here. We consolidated, manipulated, expanded, we retested it. We created another higher high. We're trading above the previous Sunday open level, that major level, which is also a weekly bounce. Right, so if you utilize the higher time frame here, you tapped into that weekly level, okay? Let me see if there's a better, anyways, you can see it, right? You tapped into that weekly level, right there. Weekly body, reversal. These are all looking very strong, so I do not get where that selling is coming from, personally. The only thing when I would look for sells here, if we shoot up to the Sunday open. Shoot up to the Sunday open or break below the previous weekly value area high and come down towards the 2316. Like that's a massive 150 pip move, 170 pips. Much more interest for me to look for shorts from there. Or Sunday open, opening past the week, rejection from there. Potentially looking for an entry model short there. Like then you have a nice spectrum. Now, then we can start thinking about moving back towards the zone, 200 pips, you know, coming down from here, 150 pips. For now, I see that buyers are in control. For now, okay? Previous daily very highs on the third wick. Yeah, 2254 is also a key level. We talked about this one beforehand. Okay. For me personally, I'm going to leave it with this. I think that the market is very unstable. I see that J.Powell is still not finished. We're going to see him talking for at least 30 or 45 more minutes. Anything he can say, price can just turn around here. The only game I like to play here is the game where we manipulate certain candles and reverse. If you don't do it, even though I see my entry models here, you guys understand what entry models we're currently looking for, right? Double wick confirmation, break, high, and so on and so on. Fantastic. But I'm also thinking about if that's the case, where I put my stop loss, there, 2047. You know, if there was a swipe, easy trade. Same here, okay? So 2 potential really nice trades. Did not meet our requirements here. Tomorrow, we will trade the news, okay? This is a given because tomorrow is the day of the CPI. And we have not lost a single news trade this year. Not lost a single news trade yet. Okay. 1, 2, FOMC, CPI, FOMC. Okay. So what we're trying to do here is to follow the same exact strategy, which is a completely different approach to what we usually utilize here. We still use LTA concepts. We still use volume. But what we don't do is buy stops or sell stops. We use limit orders. So hopefully we can continue our streak tomorrow. And after the news, we can trade normal, like we always do. All right? Many times during news that we take 2 trades. You know, this could also happen tomorrow here. Okay? So if you're new and you have never traded the news before, my suggestion is to go back into the streams or pay very close attention to tomorrow's stream. And to the strategy itself, because it is kind of a unique approach to trading news. And people say, yeah, gambling. I get it. But there are many ways where you could secure yourself before shit goes wrong. And I'll explain that tomorrow. Okay? So yeah, sell. It was definitely no sell. Okay? I really don't know where that was coming from. Yeah, volume, man. Volume is king. That's all can I say here. If we continue up here, we're going to go to the Sunday Open. If we reverse, the only level I would look for sales from is that 2360 level or below the previous week very high. That's it. These are my potential selling levels. Now heading into the Sunday Open here, might be that continuation play. Okay. Some people still take trades regardless. This is up to you. I'm not saying that you should take it. I'm not advising you to take these trades here. Could have been a nice winner, but at the same time, there are reasons why I don't take them. Okay? And you're gonna see later on why that is particularly and why this is important for me. Okay? I want to keep winning. I want to be at 50 trades and I want to scale my risk. I want to double my risk per trade. And the only way to do this is to follow my rules here. So you have to trust the process. Okay? In regards to my eye, make sure that tomorrow when somebody asks, say boxing. Okay? All good. So we can focus on trading. All right? I think that's the best thing to do tomorrow. So tomorrow is going to be by far a massive stream. It's going to be the CPI stream. I want you to be fully prepared for it. And yeah, news trade tomorrow. So yeah, come a little bit earlier. We start a little bit earlier tomorrow. Okay? So be aware. All right? We're going to start 25 minutes before the actual news here. All right? Hope that makes sense. So yeah, good luck, fam. All right? I'm going to keep you updated. And yeah, let's keep the process. Let's make some money and hope you learned something today, regardless with the volume on the lower time frame. Volume does not lie. I love you all. CPI, man. Much love. Thank you very much. Thank you for studying. See you tomorrow. Bye-bye.